Good morning. Welcome to this Thursday, July 31st. And excuse my voice again. Voice is crappy. Kind of getting to the motions of a cold. But anyway, going into today's trading, look at that freaking market popping. That is something, right? So this is all about Microsoft and Meta earnings came out yesterday. After they closed, Powell managed to really get the market in a kind of shitty mood. They had a late in the day, very late in the day, little snapback. So we pretty much started off more of a range-bound approach, but you could see, right, this was like, let me adjust this just a little bit first and scroll this guy up a little bit, like so. So as the Fed announcement came out, pretty much as expected, market wasn't too happy. We were heading lower at a pretty good clip. So we were down here crossing over this low volume area. And then that's why we did the last update. And I was thinking short out of the market unless they can trade up above that 85. And then in that last half hour, the last 10 minutes, they saw it started scratching up above it. Then right after the 1 o'clock, the 1 o'clock, 1 o'clock, the 4 o'clock when the market closed, we get the earnings, and you can see market just absolutely pops and rips higher. It crosses the whole range and make a new high before the close, or before the session close, the global session close, and then it's in the overnight that's creeping a little bit higher. It's all about the Microsoft and Meta earnings. Totally reversed the whole Fed outlook approach. Meta is up $80, all right? Microsoft is up $40. And these are trillion-dollar stocks, all right? These are trillion-dollar stocks popping like that based on AI reporting, all right? And if you haven't started figuring out the infancy of AI and what the growth potential is on that one, and it's gonna be it's time to put some money to work there. It's just something because I mean you have at least Meta, for instance, have all this data, and now they have a formula for actually harnessing that and increasing productivity, targeting stuff. It does nothing short of phenomenal. So there's a long way to go on these areas still. But so the market is up. We are making new highs in the overnight, and we'll see how far they can take it here as the day kicks off here. As the day kicks off, this evening we're getting, I believe, Apple and who else is it? It's Apple and one more, which is reporting as well. And we'll see how that shakes out. But so far, a massive moves to the upside, and the whole dragging the whole market with it as well. So I would start from the long side of the market, given this overnight news, this little tailwind we got going, and see how far they can take it. So looking to buy weakness against the 64.50s, 64.40s, 64.30s. This range is pretty wide. As you see wait, come on, there you go. There's a little bit more than I wanted to cover, but it's better than to try to split it and make the levels too close to each other. It just gets confusing. So a little bit wider range here at the 64.40s, 64.30s. If they start trading below that 64.15s, maybe start worrying and take off the long bias. But I would look to buy against weakness. If we see like an early morning knockdown. It can happen when you have an overnight like this because there's not a lot of volume in the overnight. So you can certainly see some profit taken and run it lower. But when you have two stocks gap up like they did, chances are that's going to get bought, and we're going to see this moving right back up again. So trading this one alongside, not going to be very aggressive on the short side at all. 64.60, 64.55s and the 60.65s here, potential short opportunities, but as I said, not going to be very aggressive on that at all. Looking to buy weakness, 64.50s, 64.40s, 30s down to that 64.15 to 20s. And if that mode of yesterday comes out and it starts trading below it, I'm taking off the long bias going back range bound at that point. So pretty straightforward stuff, I think, to get started. The key question for today is really what happens now when the earnings kick in. Now, news-wise, if you touch on the news with that, you should do the first thing, but News-wise, at 8:30 we get jobless claims, personal income, employment cost index. And remember, personal income and outlays has that PCE read in it. That's your inflation read. I don't think that's going to be a big deal though. It's coming down. Inflation is not one of the key things right now. I know the Fed is looking for it, looking at tariff inflation kind of thing, but so it's still valid to pay attention to that report, but the overall inflation numbers are down quite a bit. And even if they tick up a tenth up or down, that would be a thing. But if they start ticking higher with a steady clip, yeah, it's going to become a problem again. But at this point, I'm not going to be super worried about the personal income number coming out. But so we have news at 8:30, then at 9:45 Chicago PMI, 10:30 we get the nat gas report, and that's about it. So that's our news for this morning. Then tomorrow we get employment situation and some other stuff, but big news, August 1st tomorrow, last trading day of July today. So starting off today with a nice tailwind, let's see if they can make something out of it. Okay, keep going. Looking at the bonds and the Nasdaq bond market real quick, range bound, range bound, range bound. So it starts sounding like a broken record, but that's where we are. So I'm going to be looking at selling strength 1416, 1420, 1425, 26s. Looking to buy against 1408s, 114s down to the 1326s for rotations back up. Tight range. I'm going to leave it at that, and then let's fade the edges if you try to trade that. We could get a reaction on the personal income number. We'll see. And if they trade outside of that range, just try to trade in that direction at that point. Nasdaq is the one which is really popping. Today they had a hard time. They're struggling a little bit on the ES side, but obviously Nasdaq is the one which is going to get the big benefit here. So they were down here and they looked pretty gnarly here before after Powell's press conference. And then right after the close, it really started taking off. We got a little bit snapback though, so they kind of mitigated most of that going into the overnight, but the Powell comments, but the news just popped that thing. The tech stocks to the upside in a big way. So they were all the way up here to this 23,800s. And we'll see how far they're going to go. But so far, not a lot of retracement. So, but I'm still looking to buy weakness on these guys. This guy should be a tad lower like that. So looking to buy against that support area, the 760s, the 690s, a 650s down to the 600s for rotations back up. If they trade below that 600s, I would take off the long bias, but I'll give it that the range to back off if they're going to try to knock it down at the get-go. And if they just keep if they also keep grinding higher, that it could certainly be a pretty strong day. But both in Microsoft and Meta, way up. I would not be surprised to see some short-term profit taking there. But then I think those stocks are going to get bought. And usually when you get gaps up like that on the big tech stocks, they tend to keep moving from there. Usually they keep moving after. It's not like an algo trading where they pop it and reverse it and mess around. Usually that's more institutional stuff start pouring in at that point. So looking to buy weakness against the 760s, 680s, 650s, down to the 600s, and then below 600s, take off the long bias on the Nasdaq. And then finally, oil and gold. Oil, excuse me, is to the upside still. And the key thing for the oil now is that they're going to extend. Is this a little probe to the upside running it? It doesn't move out of the middle right now to the upside. We'll see if they going to hold this edge. 68.70 to 69 is the edge to pay attention to. That it starts trading below that, take off the long bias. We are back in this lower range. So at this point, hard to say where they're going to go. It feels counterintuitive to me, but since the trade deals are getting taken care of, it could be a demand picture as well. A lot of trade deals coming together, and it could be just the fact that a lot of turbulence is getting avoided, and the demand picture is looking better for energy. Could be driving this higher. We're looking to buy weakness 69.30s, 68, 69.30s, 69s down to that 68.50s. And I would say below 68.50s, take off the long bias. look for retracement into this lower range at that point. On the way up, not going to be very aggressive on the short side yet. Looking for shorts again, 69.70, 70.20, 70.50 with a lot of caution. I still haven't quite figured out what's driving it, if it truly is a demand picture or something else. But the only thing which makes sense right now for oil to trade higher would be a demand picture, the change in the demand of oil. All right, but as supply comes online, that should just be equaling out or maybe even come back down again. So that's how we get started on oil. Slight bias to the upside, and or a bias to the upside, I should say. And gold, we gapped up. We rolled to the December contract. They gapped up, and they closed the gap yesterday. Then we're right back up again. Big moves on gold. That was a spectacular day yesterday, but the overnight has been pretty wild as well. So they were back up here. They opened at the lows. They're running higher. Been pretty much trading around that value area, and that's kind of what we thought as the closed yesterday. We were looking at basically rotation back to that mean at 33.40s. That happened in the overnight. But they kind of shot a little bit higher as well. So they may want to run up here and test the highs again. So at this point, I would start off with a slight bias to the upside to see if they can retest these highs, potentially take it higher. But we are still technically in a range. So as they trade higher, if they do, I would look for shorts against the 33.66s, the 78s up to the 88s here for rotations back down. And looking to buy weakness early on, at least at 53.45 down to the 40s. Just a few levels, but if they back off more than that, I'm not going to be more aggressive than that. So if they can't keep it, if you get a little bit of dip down and look to buy that initially early on for rotations up, if that doesn't materialize, then we're probably going to stay in this range here, around about 33.40 at least for a bit. So that's gold. Starting off with a slight bias to the upside, see how far it can take it. Chances are we're going to see rotation down to that 40s again. And oil start from the long side and see if they're going to try to extend again. And the lower edge is at 68.50. Below that one, we'll take off the long bias. All right, back to the ES. And so far, everything is kind of on track. So big tailwinds coming into today's trading. We got some significant news coming out at 8:30. Most importantly, the PCE number. And then let's see how the market's going to react to this whole thing. So get ready, get some coffee. I'm going to go get some coffee, get something for my throat, and then we'll go at this again. So good trading, guys. And I'll see you back at 11:30 for the next updates.